Hey everybody, welcome to my stock trading tips. My name is Andrew, and in my last video I talked about the difference between trading and investing. Now in this video I want to kind of do like a part 2 to that video, but I'm not going to go through the difference between the two again. If you haven't seen that video, go ahead and check it out. But in this video I want to show you a trade where it was very frustrating to me because I took a loss. Now, taking the loss was 1000% my fault. And I want to use that trade to, I guess, help you understand why the whole idea of trading versus investing played a role in me going ahead and selling for a loss instead of hanging on to it.
Okay, here's the stock that I traded recently. The ticker symbol is NBL. Now I use Thinkorswim for my charting. If you want to check that out, if you have it, you'll recognize it. But this is the trade. I bought this at $35.68. So I actually bought it in this candle somewhere. And you can see it spiked up right away. I could have sold it and gotten at least $1 move on it, but I did not. Now that, I'm okay with that decision. The problem, the bad decision I made is coming up. But let me do a quick recap where in the last video we talked about trading versus investing. And I said that traders really don't care about a stock's story. What we're doing is trying to find stocks that have a lot of interest in them. And you can start seeing momentum building. So this is an example of a stock where I noticed that there was momentum building behind that stock. And I literally want to follow the crowd. Now, I don't want to follow the crowd all the way to the destination because in all honesty, nobody knows exactly what's going to happen next. Nobody knows for sure where a stock is headed, where the price is headed. You'll watch the news and read different articles and whatnot, and I'm sure there are analysts who are covering Noble Energy, and they're saying all kinds of positive things or all kinds of negative things. But at the end of the day, nobody really knows. The crowd decides where the stock is going to go until we get some facts. So as a trader, all you're trying to do is follow that crowd, and you want to ride that wave of enthusiasm just long enough to make a profit. And then you go ahead and you get out. So I with that in mind, I entered into this, as I said, at $35.68, and it started to drop, and I was okay with that because the market right now is very jittery because of all of the potential trade war with China, and even if a stock is not going to be directly impacted by tariffs, these are still people, they're still traders. This is real money at stake, and so people are some will just pull their money out. All right, so I was not concerned that it dropped. Well, it started to tick back up, and I figured, hey, this is exactly what I was thinking. It's going to most likely get back to where it was and maybe continue on higher. Well, I started having tunnel vision about that though. What was looming on the horizon was earnings. Now the thing about it, when I said you're just following the crowd and you want to ride the wave of enthusiasm, nobody truly knows what's going to happen with the stock. We're just in the stock because traders are in the stock because we think something good is about to happen. We want to buy low and sell high, and so we're just riding that enthusiasm. Everybody thinks, hey, something's about to happen. Let's go ahead and see what's going on. You don't want to truly see what's going on. You just want to join the group for a little bit and then get out. Well, earnings is where it goes from speculation to fact. Because in earnings, that's where a company says, hey, I know this is what you guys thought we were going to be doing. This is how much money you thought we were going to make in this quarter. But this is how much we actually made. And if that number is not a good number, if it's not what everybody thought, if it's not what they thought it was going to be, or better than what they thought it was going to be, then the stock could just tank. And so that's what happened here. So I was involved again at $35.68, wrote it down, didn't panic, no problem, but I ignored the fact that on August 3rd, there was an earnings call. And look at what happened on August 3rd. Well, I'll take you back to August 2nd. And in this candle right here, the price, the closing price for that day was $35.83. So I could have sold for a very small gain. I think probably like $80 maybe. I could have sold for a very small gain. I didn't though. And that's where I switched from executing a strategy, which I'll get into at some point, to relying on luck, really, to be quite honest with you, because I held that stock and the next morning it opened up at $33.02. So I ended up selling this for a loss at $33.11. It was painful. Now the reason it was painful is because I knew better. I knew better than to hold on to this stock with earnings coming, because I don't know anything about the stock. Remember, I was saying in the last video, an investor will be tuned into the story. An investor will look at this big drop here as an opportunity to buy more if they still believe in the stock. But a trader, this is bad news for a trader. And I completely created this situation because I ignored the fact that earnings was coming up. But because I am trading, I went ahead and I took that loss, because I'm not trying to turn this into an investment now and saying, oh, I'm just going to hold on to it. I'll just hang on. At some point, it's going to turn around. At some point, it may, but that could be a year down the line. As a trader, I'm not trying to have my money tied up that long in a stock that I don't know anything about. And notice what happened the next day, which is today, August 6th. It dropped more. So if I had just been holding on now, well, I'm deeper in the red. And who knows what's going to happen tomorrow. But it's all because this whole thing was created, this loss was created by the fact that I ignored earnings. I don't want to hold a stock into the earnings call if I know nothing about the company, because that's where it switches over from speculation and just riding a wave of enthusiasm to having to deal with reality. And the reality in this situation was the company did not make as much money as as everybody thought it would, and it actually had to guide toward the lower end of its total revenue, I believe it was, for the whole year. And nobody wants to hear that. They basically said, we're not making as much money as y'all thought. We're making money, but not as much. So I just wanted to use that as a quick example. Don't ignore those warning signs. Trading is strategy, and it's also discipline. And there'll be times where lack of discipline will come back and really bite you. And it bit me on this trade. I just wanted to make sure I shared that with you guys. On this channel, I'm going to share what I know, but I'm not going to make it all nice and rosy all the time, because that's not reality. If I take a loss, I will most likely use that loss in a video to help you guys understand, why it happened to me, where my discipline broke down, or where my thinking broke down. And hopefully when you see some of these and you hear them, you'll be able to help that inform your decision making. I'll also share the times where I make money on a stock, but it's not about bragging and saying, hey, I made some money. It's about, well, what was the thinking behind it? Let's analyze this. Let's break it down. If you like this video, as usual, please go ahead and like it. If you know anybody who could benefit from this type of information, share it. I always say I'm not an expert, but I've learned a few things, and I just want to share what I know. So I hope you check me out in the next video. Take it easy.